Good morning. On this hot sheet, I'm going to be talking about this week's housing inventory, Friday's job reports, and Fannie Mae's consumer sentiment report. Today is Monday, March 10th, 2025. I am Byron Lazine. It's a big week, and the hot sheet starts now. All right, welcome into the hot sheet. Let me know in the live chat which market you are tuning in from today. It's a big day because Haley's back producing the hot sheet after her week off in sunny Florida. It's also just a big week in everything that we have going on here in our world. This is the only show that does a 24-hour look back on housing Monday through Thursday when the markets are open. But we've got a lot of stuff going on economically that are going to impact the housing market. It's a CPI week. So Wednesday, we're going to get the CPI report. Next week, the FOMC convenes and makes their next decision on the federal funds rate. There's another consumer sentiment report coming out today. Of course, we're going to look at Fannie Mae's, but I think there's the New York Fed. I believe it is the New York Fed coming out today. Jason, I am feeling better. I think you probably got that news from the Knowledge Brokers pod that I was not feeling good on Friday. Luckily, back feeling much, much better. Do not get that stomach bug that is going around. I think staying off planes is maybe the first move for that. But regardless, there's so much going on. You're seeing the markets move down again here on the open. If we just look after a rough week on Wall Street last week, the Dow's down 400 points. Again, as we're 3 minutes into this open, so another move down 420 points. The sell-off gains steam on now what they're using. Again, this dirty word is being used once again, recession fears. Okay, so you're going to see that here throughout the week. It are all of the tariff issues or confusion or implementations, however you want to word that, creating, recessionary concerns. Is, a weak economy from 2024 now just unsustainable. All these different things. Inflation, is it getting better or is it not? There's all these things that are now going to start leading into the recessionary word popping back up. Now, there can be impacts on things like lower rates. We'll take a look at that in a little bit. But first, let's dive into what we want to check on here at the beginning of each week, which is the inventory from the past week. It's something we've been doing every single week on the hot sheet because there's really only a couple of ways that we can start to gauge where affordability on housing is going to go. Okay. And that's going to be obviously the interest rates. Do people make more money or do home prices come down? People making more money is probably not going to get us there. So our home price is going to come down or our rate's going to come down. Well, rates have come down over the last couple of weeks, not to the levels that we would start calling the affordability pendulum swinging back towards buyers versus renters. But the other way to get there is if you have enough inventory onto the market, it can start to stabilize prices. And then in certain areas where you've got, an exorbitant amount of inventory, it actually pushes prices down. Right now on inventory here over the last week, we've saw it go up 639,000 to 642,000 plus. The same week last year, we had inventory at 500,000 even. So we're at 28% more than last year. We've been moving sideways essentially for the majority of 2025. We started January at 650,000 active single family homes, and we're today at 642,000. The lowest point was 624, and we've basically steadily gained to that point now to the 642K. This is single family active homes, remove pendings. Okay. So NAR's number comes in different because it includes pending sales. Our inventory peak last year was at about 740,000. last year being 2024. So still off of that. If we look at 2019 March number, we were at 819,000. So we're within 180,000 of that number. So still pretty far off from where we were pre-pandemic across the country. Some markets, obviously, Southwest Florida or Texas, are going to be in the, on the other side of that equation. The more inventory we continue to gain, the more this market will normalize. One of the biggest drivers for inventory can be obviously new listings. And this is the time when we would expect new listings to increase. If we look at the last 3 years, we're coming into the next 3 months, 4 months, where we would expect single family listings to go to their highest rate of the year. Just looking at the last week, we had about 64,000 new single family listings come onto the market. That is more than the 59,000 we saw the same week in 24, and certainly more than the 50,000 we saw the same week of 23. So trending in the right direction right now on national single family new listings. That number, though, is still pretty low. I mean, the last couple of years was the lowest ever recorded on new single family listings. These numbers, while they're up, they're not up that much. So we're still trending near lows. That locked in market is still a real thing for a lot of would-be home sellers, or certainly home owners. 33.6% of properties with recent price reductions is where we're at right now. That's up from 31 and 31% each of the last 2 years. So a little bit higher on price reductions, which is interesting because our inventory, while it's higher at 28%, it's still not anywhere near those 2019 levels. So we're getting some of the sellers that are on the market. They're serious. They have a real need to be on the market. And if they're on the market for any period of time, it's creating a more serious seller in the sense that they're willing to move the price when they need to. Okay. In terms of pendings, to get sellers into these pending situations, they're moving their price when they need to, still within normal numbers. A third of properties each year will actually reduce their price before selling to get into this position, which is pending. We have 3% less single family homes right now in contract than last year, according to Altos research. Now, each of the last couple of years, the beginning of March, we saw a little bit of a flattening on pending sales before picking back up in the rest of March and into April, and then certainly it kind of tops out in May and June. The last couple of years, 2022 numbers were obviously unprecedented in comparison to where we are today for homes in contract. So lagging behind last year's numbers, which overall sales were really low last year. We're at about as bottom of a floor as you can get, just breaking the 4 million mark on existing home sales last year was a really low number. Everybody was hoping for a bump up. So far this spring hasn't brought that bump up. There's been pressure, and one of the pressures has been mortgage rates. Now, mortgage rates have been moving in the right direction the last couple of weeks, but overall, when we look at rates, we've got 3 positive readings, 3 negative readings, and then 2 flat prints. When we're looking at mortgage rates, which have ranged between 6.64 recently within the last week or so, up to 7.25. So we've seen a full half point plus swing on those rates. When we get those application readings, mortgage applications, and we're getting, applications that move down, it's in those weeks where we're up over 7%. Okay. We'll continue obviously to take a look at where we're going to be at on rates. We're going to take a look at rates here going into this week, just a little bit. Some of the news, unfortunately, for the economy, for the recessionary fears, all of that can help with rates, and we'll take a look at how that might be helping. First, let's tap into the minds of the consumers. Okay, Fannie Mae has their consumer sentiment report that is out for February 2025. This includes their home purchase sentiment index. Consumer mentality right now is super important. Consumers can actually almost think themselves into a recession. If consumers aren't confident, they pull back on spending, they pull back on investing, they pull back on basically believing on the economy, and that can drive the economy down. So it's important to have consumer sentiment going up if you're going to predict what might happen in the future. It's one of the ways to look at it. The home price purchase sentiment index right now has gone down. It's gone down 1.8 points to a 71.6 in February. Now, home buyers, believe it or not, in 2020, when they should have probably been at 100, the end of 2020, or really, I'd say 21, 22, when they should have been at 100, I should say, because the interest rates were so low. They weren't. They were in the 70s. So we're not that far off from where they were. We're well above the bottoming out when the interest rates started skyrocketing at 58. We're nowhere near the end of 1920 when we were at the 92 and a half. Remember, even before COVID, look at how good buyers felt about the market. 92 and a half. Rates were very reasonable. Very, I think you'd trade today's rate for that rate any day of the week. You had inventory. You had what was going to be 2020 if COVID didn't happen. A very normal, kind of even keeled market. Sellers would have had control, certainly, but it would have felt a lot more normal than anything we've experienced since. And the sentiment across buyers, like, hey, even with sellers having control, they felt good about buying houses and the investment and the money that they were putting into it. 92 and a half is where buyers were back in 2019. Now today at a 71.6. So where can this information, this data be useful? It can be useful in a couple different ways. Okay. If I'm working with a buyer, the fact that other buyers are feeling, their home purchase sentiment is going down right now, it gives me the ability to stay in the game and not play the I'm going to wait game. The longer everybody is waiting, when things do break in their direction, it just means the more people are coming out all at once. So I want to be active during these times when there's fear. That's when there's opportunity as a buyer. As a seller, knowing that this is going down, if my goal is to get the house sold this spring, I want to be out ahead of some of this stuff, and it might move my timeline up. I might not be waiting for the perfect spring photo anymore. I might be coming on the market sooner than later before this situation ends up getting a little bit worse. Buying conditions right now in February, 76% say it's a bad time. Okay, that's the net change here is up 2 month over month and +9 year over year. Selling conditions, good time 62%, bad time 37%. Net change down 3 and down 5 year over year. Home price outlook going up. 41% believe home prices are going to go up. 23% believe it's going to go down. The way people are thinking about home prices are also a good conversation to have. Mortgage rate outlook, 30% believe it'll go down, 33% believe it'll go up. No, I mean, it's almost like a lot of analysts, nobody knows on that. Job loss concern, 77% not concerned. That's down just one tick month over month. So a little less confident on job loss concern there for consumers, according to Fannie Mae. All of the charts on this stuff, guys, too, is available inside for BAMX members. So if you need Texas information, send it out into an email, send it out to somebody in your database. Simply jump into the BAMX platform now on school.com/BAMX, the #1 community and training platform in the world. Just click on your classroom tab, go down to the daily market data for the hot sheet link here. And all of today's charts, data and information is going to be right here available for you. You can just download it right here, top right, whether it be on the mobile app or on the desktop. Consumers are more pessimistic that mortgage rates are going to move down than they have been. Still not a huge number there. There's still, about a third and about a third saying go up, third going down, and a third staying the same. So there's a lot of confusion around rates. There's a lot of confusion around the economy. There's a lot of confusion around, are we going into a recession? There's a lot of confusion on, should I be keeping my money in equities right now, or should I be moving to something more safe or long term? All right. And that confusion seemingly is going to be here for the rest of the week. We'll see what it when we get the CPI report on Wednesday, what that might mean for inflation. But again, jump into BAMX, grab that stuff. It's all available for BAMX members, as well as all of our hot sheet show notes. Of course, each and every single show, you get the exact information, the way that we make the cake here inside of BAMX. Simply go to school.com/BAMX to grab that information. All right. Moving into last week's jobs report, the big report from Friday. I know Tom and Lisa covered it a little bit on the Knowledge Brokers podcast. I just want to review this really quick. Unemployment is unchanged at 4.1%, and payroll employment rose by 151,000 in the month of February. So unemployment staying steady, and then payroll employment over the month change is not that significant either. So not a huge move on this. 4.1%, I think, is the biggest takeaway for me. 7.1 million unemployed. That number's continuously dropped from those peak of 11 plus million. And 4.1% is still a very strong unemployment number. We're not going to really see any concerns from the Fed on unemployment unless it got up over 4.3. And we don't expect, and CME Group doesn't expect, the Fed to make any cuts to the interest rate unless that labor number starts to break. It's a 97% certainty that next week, when the FOMC meets, that there will not be a Fed cut on the interest rates, despite the administration wanting and seeking those cuts. Not going to happen next week, and not really going to happen until the labor market breaks. So we're still kind of in a holding pattern there. If the labor market did break, it would obviously push rates down. But this news of just and nobody likes it. If you got money in the stock market, I'm sure most of us do. Nobody wants to see the stock market moving down. It obviously can create a buying opportunity. This is not financial advice, but it can create a buying opportunity. It's also creating a little bit of an investor opportunity over on the 10 years. People move out of equities, investors, and move into other assets that they feel better about or feel safer about. And it's pushing the yield on the 10-year down overall. If we look at the last month, we're basically near a low point again. If we look at the last 3 months, we're near a low point on the 10-year Treasury. And this is what has helped. And just in the last 24 hours, look how much it's moved down just on the opening of, where the pre-market trading was coming in here so far this morning. And if we look at the 30-year, what that's done here over the last couple of weeks, it's pushed us down to 6 3/4, which is a really good number, giving some tailwind to the spring market. 6.63 was where the Freddie Mac 30-year fixed weekly came in last week as well. So it's been meaningful for rates, for the mortgage rate, for those mortgage shoppers. Now, not everybody is shopping with a mortgage. In fact, 1 out of 4 buyers last year did not use a mortgage, and 40% of current homeowners do not have a mortgage at all. So there's still a ton of cash buyers out there. Jumping back into school, where on BAMX, We'll jump into Zudilio's report for the last week on the top 10 housing markets for cash offers. Las Vegas, San Antonio, Memphis, Indianapolis, and Atlanta make up your top 5, with Dallas, Tampa being the only market of the top 20 Case-Shiller markets, which is down year over year on home prices. Tampa comes in at number 7, though, for cash offers. Jacksonville, Raleigh, and Phoenix. There's your top 10 for top 10 housing markets with cash offers. That data is driven by Zudilio. By the way, all BAMX members get access to a Zudilio platform for life of your BAMX membership. So jump into school.com/BAMX to secure not only everything inside of BAMX, but your Zudilio platform, which can bring you up to four offers on each listing before you even start showing the property. If you want to compete with an iBuyer, there's no better way than doing that through the Zudilio platform. Or if you just want to bring more options and more ways to kind of skin the cat for your seller, use Zudilio's. Sellers should be able to have more options, not less. This lines you up as the expert. Zudilio partners with agents as opposed to trying to remove the agent from the process. Get your Zudilio platform by being a BAMX member. That alone is a $2,400 value. Rocket buying Redfin. Okay. It makes sense. It makes sense. If anybody that watches the Knowledge Brokers podcast knows that I picked it not only does it make sense, but this is actually news. Okay. It does make complete sense. Wow. So wow. Who was that? Well, there you go. Thank you. It's not been one of my normal mornings. And so I appreciate you, bringing this into the chat. So here's what I'll say about this in real-time reaction. Rocket companies to buy Redfin, $1.75 billion deal. Wow. Only 1.75. Knowledge Brokers being the year, I said I think Redfin gets bought out this year. I picked Redfin as as my loser of I picked the CEO rather as my loser executive of the year. I think this kind of secures it for me over Tom and Lisa. I mean, why do I say that? Why? Because Redfin's never been able to make money. I mean, if you just look at the stock, here's the Redfin stock. And this is all time. All time, they're down 52.63%. I mean, look at where they were everybody was up in 2021. So this is a little bit unfair, but they were at $96. I mean, today they're up 77%. They're up 77%, and all time they're still down 52%. So before this move, they were down over 125%. Okay. Redfin up 77% today on this news. Basically, an almost double up here for Redfin. Now, why does this make sense for Rocket? Rocket recently they took Rocket Loans and they took Rocket Homes and they combined it into rocket.com. Okay. For those that haven't gone on rocket.com, spend some time on there. I talked about this recently, I think on a Real Word podcast. Maybe it was Real Word, maybe it was Knowledge Brokers. I can't remember. If Haley remembers, you can throw it in the chat. But I recently spoke about this on a pod. Rocket.com is moving for the portal business. Okay. I mean, when you go now on rocket.com, the first thing is a search criteria, market reports. Okay. The amount of data that they're now Rocket pulling in with Redfin, the amount of data that Rocket's going to pull in with Redfin is unprecedented. Traffic is traffic is going to be, I'll pull it up real quick for you, but traffic is going to be somewhere around 15% of the app. Let me just get it for you. I'll just go to Zillow's investor deck because I know it's here. That's 13%. So this is just on the app. This isn't online, but this is just the app. Zillow obviously at 64, Realtor.com at 15, Redfin at 13. So like Rocket, everybody's brokerage that's on this call, if you're part of a brokerage, maybe you own a brokerage, your IDX website, your IDX app, your, Compass's app, Remax app, Keller Williams, everybody's app, and as well as Rocket.com is all in this 8%. So let's say Rocket had 1% of the 8. I don't know that they do. I'm just throwing that out there. Well, now they're at 13 plus the 1. Whatever they were at of the 8%, they're at 13% now. Rocket now is going to be handing out leads to agents in exchange for mortgage business. Plain and simple. If I would imagine Rocket's going to clean house on the brokerage side of Redfin. I'd imagine the next thing is, go find another brokerage to work. Maybe not. Maybe if I was Rocket, I would be trying to play the Zillow Realtor.com game to capture mortgage business, because that's where their profitability is going to be, the mortgage business. But if they're going to keep the Redfin agents, that's interesting. That's interesting because now Rocket is getting into the brokerage game, because really that's what Redfin had become, is a brokerage. So, is there enough room for Redfin to chase? Well, Redfin is, as predicted, completely done. That they're finished. I've been calling this for a couple of years now. They got bought out by Rocket. Rocket is the major player. That maybe could chase. Maybe you meant Rocket. Rocket could, make a move here. Where does this put Homes.com? You don't even see Homes.com on that app list. They run Super Bowl commercials, but this is another major player now. So this space is getting competitive. I like the competition. So yeah, Laura meant Rocket. Can Rocket chase down Zillow? No. Could they chase down Realtor? I mean, the traffic is already neck and neck. If they operationalize that business to make sense, here's what Zillow's doing now that we'll see how it works for them. They're going to try to get into the mortgage space. So Rocket has the mortgage space built. They're now going to try to figure out this lead flow, which Zillow has built. Zillow has lead flow built, and they've been trying to figure out the mortgage space. So they're coming at it from different angles. The expertise Rocket has in mortgage, the expertise Zillow has in lead generation. Those are the two weaknesses of now of each other, of the competitor. Rocket's got tons of money. They could compete from, the check writing standpoint. This is huge news. It's interesting news. By the way, get ready for more big news. I'll just leave it at that. Get ready for more big news in this industry. There's going to be news coming like from all sides throughout the year. Some of it may very, very soon. You're going to hear some more big news very soon, quite possibly. But big moves, mergers, acquisitions, consolidations. This one's a huge one. This is enormous. There's no question about it. I'll probably talk about it, at greater detail as I do some digging in here on the Real Word podcast tomorrow. But there's going to be a lot more. Q4 last year, mergers and acquisitions are now opening back up. Compass making their big move. Compass isn't done. They're sniffing around still on other big acquisitions. This is a huge move. Zillow's not going to sit tight. There's a lot of moves. What type of MLS consolidations? What type of association moves? The next couple of years, there's going to be a ton of moves. Jeff, there is some moves that, yes, there's going to be a lot of news and information. And so just be ready for it, be educated on it. I'm looking forward to digging into this Rocket thing. What's my take on this? Are they more potent than Redfin? Oh, 10x. Is Rocket more potent and powerful than Redfin? By a lot. We're talking a significant margin. Glenn Kelman's never achieved the dream that he set out with Redfin. He never accomplished it. His dream was to be a discount broker. It didn't resonate. People in North America want value. They seek it out. They're willing to pay for it. People like nice things in this country and in Canada for a reason. They want good things. They want quality. They want nice things. So Glenn Kelman never was profitable. This was the only deal at the end of the day for shareholders to recoup money. They got a 77% pop. I mean, this is what investors and shareholders think of a Glenn Kelman run Redfin versus Rocket running it. A 78% pop. If you ever seen Succession, when Logan Roy goes out, he's in the hospital and the kids take over and the stock completely dips and you just see the stock going straight down and they're like, that's Logan. That drop in the stock, him being out in the hospital, that's him. That's the leader's impact. It's the opposite with Redfin. The leader is that built Redfin is now being bought out. Rocket does the number one mortgages across the country, 77% pop. If you owned Redfin on Friday, you're loving it today. If you bought on Friday and you didn't buy it, some of those outrageous numbers. But that's the investors, the market feel this way about the new guard of Redfin, the new model, the new mission, the new operation, 76%, 77% pop. All right, more to come on that. A little bit of breaking news there at the end of the hot sheet. Hope everybody has a great start to the week. Hope to see you over in BAMX, school.com/BAMX. Hope to see you in there soon. And of course, until tomorrow morning, toodaloo.